Hey guys, this is Eric with Inspired Trading. Hope you guys are having a wonderful weekend. This is Sunday, August 9th, 2020. We're going to see if we can get some forecasts done for the coming week. We're going to focus on a daily chart today, and I'm going to go over a few Forex pairs. All right, so let's get started. All right, so let's look and let's see what's going on with the Canadian dollar and the US dollar. All right, we have some good news. The dollar did see some strength. And then we have the stimulus packet that may be signed. So that could be a good sign to see a rally in the dollar as well. Now, what we want to focus on is we want to keep an eye on this area right here of market structure. All right. We did have a break of this key level of structure right here. All right. But I want to be mindful of this. All right, look, so we had a break and we got our retest. All right, price broke down, and then we got this candle up here. It came back to retest the area that was recently broken that served as support. All right, so we got the break and we made our way to the downside. All right, now here's something we need to consider. Was this retest strong enough? Okay, I'm thinking we could possibly see price come back up into this area, and this time we will probably get a more of a deeper test into this box zone where these where market structure has formed with multiple candles touching within this region. All right, now this is a little bit of confluence as well too. So what we want to do is we want to take the top of this move down to the bottom. All right, and we're going to use our Fibonacci retracement tool. Okay, and we want to see where these candles, where they lay. All right, now I had this blue box right here, and so it was a little bit below this 61%. Let me draw this for you so you can see. All right, we got a 61% retracement level. Okay, so we've already crossed the 23%. What we could anticipate is that we had a bearish rejection on Friday. We could see price come back down into this area before resuming going north. All right. The key area that it needs to break is this 32% area. And then we will be able to see whether or not we can break through these next levels. So this is an area of market structure where we actually need to break as well too. So this will be one of the major key first zones as well. So what you learn is that market structure with support and resistance, all throughout the chart, you're gonna have these different areas that price has to overcome. All right, you just can't just dismiss this area and just automatically say, oh well, hey, well, price is just gonna come up here, and I'm just gonna wait. I mean, yes, price possibly could come back up here, but you first have to go over these hurdles first. All right, so a lot of times we need to take these first hurdles very serious. But what we are anticipating, at least price comes here, and if it breaks this area, yeah, of course we can get a little bit pullback, but we're looking to ultimately come up into this area right here. And this area is serving as a potential 61% retracement of this whole entire move to the downside, okay? So we're looking that price could possibly push back up into these areas, all right? And then once they're in those areas, we could possibly see now move to the downside even further. But first things first, we need to take into consideration the dollar did see some strength. The non-farms payroll numbers came out a little bit better than what they expected, so that helps. Okay, so in the meantime, our bias is that we're going to see a little bit of bullish upside on the Canadian dollar. But temporarily, when markets open, like I said, we could see a nice little sell-off. We could come back into this area. But what we can do too is it's okay to measure, especially on a daily, we can measure this move using the field retracement tool, and we can get a feel of areas where price possibly could come back down to. All right, so here we go. So this price, all right, we here. All right, look at this zone, got 32%. Price coming here, 50, 61, 78, and 86. All these are potential pullback zones, okay? So you have to take this into consideration. Personally, me, I'm not looking for buying opportunities up here. I will be looking for price to come back down into this region before I consider the buy, all right? I really feel like there's a possibility that this wick will get filled. We come back down to this downside, and then we go. If it doesn't happen, that's fine. So then I would have to wait for price to break this area and then come back to retest this area before I take the trade. Nevertheless, I'm not jumping in this trade as soon as the market opens. Instead, I'm going to watch this and see if price can come back to key levels for me to enter. All right. So that is the whole entire trading style. Is waiting for market to give you evidence for you to take action. Okay. Let's go to US dollar, Japanese yen. Okay. All right. So, all right, I like this setup. We had a strong impulsive move up. Then we had some rejection. All right, and then now we're back trying to get up to the upside. Okay. So we also see that this area served as what? A support area. All right. Okay. Price hasn't come back to retest this area. So what we could see is we could see a nice bullish move maybe up here to come in and retest. So we want to look for selling opportunities. This price maybe come back into this particular area. All right. Now we got a failed attempt. We was rallying to get here, and then it failed and it pulled back. Okay. We did break above this red candle. All right. And so what we're doing now is these candles look like we want to go and cover these wicks to the upside. Okay. We also got a nice little what you call it, a bull pennant or a bull flag, should I say? But it does look like a little pennant. If you guys don't remember what a pennant looked like, see, like a pennant. You ever see those college pennants on people's cars? Even though people call them flags, you see that like a pennant. All right. So this is a bullish pennant. All right. So we want to look for a price to break above the pennant's high points right here. So we want to see if our price can break above here. And to get the target on the pennant, we just basically take the pennant flagpole. Let's see. I think it's right here. And we can set it on top. So price possibly can come up to this area up here based off this pennant. So the bias of this is to the upside. We think that US dollar Japanese yen is long. Okay. So we want to monitor this price point. If you're not already in the trade, we want to look for buying opportunities. If we're looking for buying opportunities, possibly if price comes back down and retest this area. All right, why this area? Because remember, this resistance was broken. Want to see if a retest comes. If a retest comes back down here, we want to see if we're able to find entry and take the price higher. All right. So we were looking for this. Now, sometimes the retests don't come. That's fine. It's okay. Can't take every trade. We won't win every trade. But we want to be rules-based. I need to see price come back down. If I was trading on Friday and I saw it crossed over, I would already be in a trade with my stop loss set below here. And for all of you, I used the bar elimination strategy. You know that this bar was eliminated by this green. You put your stop loss below the candle that was eliminated. So we're already being in this trade if we took that trade. All right. But since I didn't take that trade, I'm looking for other opportunities to get in. Okay. Now, once prices get up in this area, this literally could be just another setup for it to go back short. All right. So don't make a habit of thinking that you're coming up here that maybe we're going back up higher. Look, guys, it's Forex. It can do whatever it wants. We could go higher, but what we're expecting is price coming, visiting this area, and then we expect for us to get a nice little drop to continue down to the downside. All right. So we have a classic low, lower high, lower low, and possibly a lower high. All right. Then we have a nice little pullback right here, but we want to come up in here, break this, and get another little lower high, and then get a lower low to finish and complete this. So basically, this will almost be the fifth leg going down. All right. The way this is a signal, the dollar, yes, it's strong, but I think it's a lot of temporary weakness. Temporary strength with the dollar. It's not going to be long lived. It look like, look, we're at these key levels that we're visiting in the market. All right, and price is having a hard time breaking back above here. All right, so we may get one more push to try to get up here into this area again, and then we can see a drop. All right, so now you could consider this a head and shoulders pattern. You got the head right here, you got the left shoulder, the right shoulder. It's not best, but you could argue that this is the neckline. Price broke, and price is coming back up into the neckline. Okay, but once again, this is one I have to monitor. All right, because there's a lot of things that possibly could turn out and make it more bearish than bullish. But keep your eye on this one. All right. Let's go to Euro, USD. Clear off these for you. All right, so let's do this. All right. This was resistance. Price broke resistance, but it didn't come back and get a strong enough retest. Well, I take that back, guys. Let me see. I just zoomed out, so I saw it. All right. So this would have been a perfect trade if we was trading this. You see right here, we have resistance point, and then right here, this candle right here broke out. This candle broke out of resistance, but then this next candle, we had a little bit of pullback, and it retested area that used to be resistance. All right, so now support, Buddha entered a buy, and then this is the results of it going back up. What we have to do now, we have to see exactly where we are in this overextended move. Okay. We got a few things that's going for us. We did get this green bar to become eliminated. These two greens were eliminated by this red bar. So it's a decent sign that we possibly trying to make our way back down to this particular area to retest it again or break it to go lower. Okay. Well, since the US dollar is a little strong, once again, guys, we could expect for us to start seeing some downside pressure forming. So we'll take it from this extreme low up to the extreme high, and you'll clearly see that we have the opportunity to at least come back to the 38% right here, 38% retracement level. But first we need to break the 23%, but we could see some downside pressure come down to the 38. So I will be looking for selling opportunities to come back down to this area. And we're talking about 364 something pips. That's a pretty good pip value. All right. Now, could we come back down to the 61%? Sure. Look left. Look right here. Let me draw it for you. What do you have? At an area where that was resistance. Okay. So now that could be another area of support where price could come down to that area. All right, it's another 600 something pips. But our real target trajectory is that it's this area right here. Okay, it's the main one that we want to find a bias to get short to get here. All right. So we want to see how the market's open today. We do know that this is a clear area that it definitely needs to cross. It has to get below this. There's nothing to really talk about until that price covers and gets below there. All right. There could be some opportunities where if price breaks, it comes back and retests this area and then it shoots lower. But I am looking for some downside targets for this, especially this area right here. This is the area where I expect price to try to come. I didn't mean to do that. All right. So we're looking for price to come down this way into this box. All right. So let's do British pound, Japanese yen. All right. Sort of similar. Keep bouncing off this support. It's having a hard time. Continue to the upside. All right, we got resistance. Of course, we already got a support drawn up. This one is going to be a wait and see. It's not doing anything. Either level has to be broken. And right now, it's just in a no trade zone. We need better sense of direction. All right, we need a strong break either to the downside or a strong break up to the upside for us to get a bias of what we want to do. However, these key areas could be considered areas that it could come back to. But for right now, we're not really getting what we're looking for. However, we could form another double top Price could come back up into this area, and then we could see a drop back down to this area, which is right here in market structure. That area right there. All right. Or come on down and form a what they call an M structure. See that M? All right. So yeah, keep an eye on it. But this key level right here is what we want to see broken. All right. If that area is broken, maybe we can wait for a retest or just take the trade on the breakout and add additional position sizing if price comes back for you to load up. Let's do the CAD JPY. All right, got resistance, support. All right, so we're in this channel. So we really don't want to trade channels. We need clear decision of what we're doing. At any rate, we need to break out of this this channel for sure. All right. We got a V shape. This could be inverted head and shoulders pattern. So we got a head right here, left shoulder, right shoulder forming. We could go higher. All right, this price point could come up back up to this area to give us a double top. All right, and then from here, we'll see if we move down to back down to this area to retest it or break. Either way, watch this right shoulder to form. Look for opportunities to break. We do need to break this neckline area. Okay. And on to the upside. Everybody should know how to trade a head and shoulders pattern. You measure from the head up to the neckline, put it on top, and boom. See, look left. That's what we can anticipate. So look for the CAD to be a little bit stronger against the Japanese yen to complete that inverted head and shoulders. All right, so you want to see what this really looks like? Let's do this. I want y'all guys follow me. And, all right, here we go. I'm going to label them for you so you can see exactly what I'm talking about. All right, I'm just going to label them with H is the head. So the head right here. All right, and then boom. L for the left shoulder. And then you got the right R for right shoulder. All right, right shoulder. Boom. All right, see that? Left shoulder, head, right shoulder, inverted. All right, go over here, same thing. Left, head, then just right. So then come down, form, go up. Look what happens. From this right shoulder on up, we get a break, a little bit of retest, all right, and then went higher. Now, the targets, it smashed through. Nevertheless, it hit our targets, all right? We would have had a blue box here for our targets, all right? Now, they tell you to look for entry on the break of the neck line or a retest. So this retest came, it was a little bit deeper than the neckline, but you could have got in on a retest. Some people get in early. Once that right shoulder forms and they get a move to the upside, they look to take the trade near the right shoulder. So let's see how many pips this would have been for maybe taking a trade from the right shoulder all the way up to targets. Wow, that's 354 pips, although it actually went up. I didn't mean to do that. What is that? 598, almost 600 pips. That's ridiculous. So I'm showing you guys, like I said, on a daily chart. the power of doing your analysis and forecast and able to take some of these trades based on the daily chart. It can be very powerful. All right, so yeah, so you see that inverted head and shoulders, and we see another inverted head and shoulders forming right here. Like I said, we can look for the upside. So that's the bias on the CAD, JPY. It's a possibly go long. Let's do the British pound, US dollar. And clear this out. Did I already do the British pound, US dollar? I'm not sure. I haven't been keeping up, but it looks similar to what I was talking about. Come back down. Possibly I already did. I think I did. Yeah, sorry. So let's do the British pound, Canadian dollar. All right, almost similar. Had a nice little W shape. Then we had to move to the upside. All right, double top. Not almost quite, but close enough. Double top area. See this point, okay? Push down. All right. Look like because we got a nice 1, 2, 3, 4. 4 candles to the downside. We got a nice little retracement to the upside. The retracement is of this. We make an expected price to come back down further to the downside. Let's go ahead and do a fib extension to see what price can fall to. All right. Let's go ahead and draw our box here. All right. Okay. Move this box all the way over to this area. All right. Keep an eye on this area. Consider market structure. Let's take the low, swing it high. Boom. This falls right into a little bit below the 50%, 61% in between. All right. We can adjust this. We can just put it right there. Boom. So we're thinking that price can come back down here. All right. I will be looking for selling opportunities. Get ready to sell for this. I like this trade to possibly go short on. And remember, you can measure smaller moves with the fibs, retracement, like this whole entire move. Let's take this. All right, price came up. It broke the 50. So more than likely, let's see if price can come back up into this region of the 78, all up in this area. If price does come into this area, I will look for selling opportunities, selling on down to the downside to this blue box. All right. How many pips possibly? Let's get up here. 486 is a lot. All right. But I like this trade. I think I'm going to keep my eye on this trade. I want to see some more moves to the upside. Okay. And remember, if anybody been looking at my videos, you know I talked about covering the wicks. All right. Look at these wicks leave clues. All right. Price came here, then it retreated. That means that price wants to come back and cover these wicks. And possibility this wick could be covered again as well. Okay. All right. And let me give you an example. Look at this right here. This was back in May. Look at this wick. Okay. So these wicks, that lets you know the price wants to come back. All right. Well, look what happened. All this downward move, and then price eventually came back, and this green candle right here, what? Eliminated, or not eliminated, but covered the wick. Okay. Sorry about that. Plug up the battery going low. So yeah, covering those wicks, they're like landmarks on your computer screen, all right, on your chart, should I say. So when you're looking at these charts, keep an eye on those wicks, and those wicks, they leave clues. They got a little music, guys. Had to turn on. All right, so let me do that. Let's move it over. Look at these wicks, guys. Let's see if they can be covered, and then we take the drop. Okay. Look right here. What do you have? Wick has not been covered, so we can expect price to come down to cover those as well too. So that's a little simple little strategy that you can incorporate in your trades, where you look and you see all these wicks on the chart that have not been covered, and so we can expect for price to come back down here and cover all these particular wicks. And let's see overall what's going on. All right. Okay, so look at this. We had what? Push down, rally up, then we had a drop, another rally, and drop back down here. All right, so what we have over here, something similar, had a drop, rally, drop, rally, drop, 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 rally, rally. Are we looking for another drop? Okay, if so, this will complete the M, a bigger M. Boom, 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 boom. All right, that's something to keep an eye on. All right, so clearly in the upward trend. We could come back down here and test this trend line. All right. So I like this British pound Canadian dollar setup. So let's keep an eye on this, guys. Let's see what we can do. What's another one we can cover? Try the euro CAD. I hadn't traded this in a while. All right. All right, this is a unique one. This could be what we call a cup handle being formed. All right, we have the cup. All right, and then now we're going to start forming the handle. So we may be in a consolidated state out here, and then we're going to shoot on up to the upside. That's a possibility. I'm not saying 100%, but it does look like it's shaping up to be a cup and handle formation. But once again, we just trade what we see. And right now, let me see, there is really not much to go off. Let me see. Ultimately, we want to see if this price can break to the downside to get down. All right, we got these three candles form, and then we got a nice little correction. All right, it could be a correction of this movement to go to the downside. But once again, we can do a fib extension based on that small move, so we get an idea. Price would have maybe come in this area right here. So, all right, here we go. So we expect price to maybe come here. Let's go ahead and draw this all the way over. Market confluence, price coming down. Realistically, maybe come from here down. See how many pips this would be. That's not bad. 324. That's actually excellent. All right, so let's measure from here down to there. Why? That's where price got exhausted. All right, so we're right at the 50%. We look like we need to get above to the 50 to 61% area. It doesn't mean it have to, but right now, I would not be taking any of this trade until it comes back up into this region up in here to maybe go short. All right. Remember, these wicks leave clues up here. Of course, these wicks does as well too. Before we go short, we may try to come up here and cover some ground. All right. So that's something to consider. Let's take the overall trend. Let's start from the bottom. And guys, if you're having trouble identifying where to start, just look for the lowest. If you're going to the upside to measure your retracement tool, using your retracement tool, go from the bottom up to the top. But find one of the most recent area lows into the most recent area high. I don't want to go too deep down here. I mean, even though this could still be considered part of it, but I just want to measure this one, okay? And if it was one a little bit lower on this other on the left right now, I can drag it from there. But this is fine. We got to break it to 23%. We're back above the 23%. That's what we want to see. We want to see that pullback. All right. So this is considered a loading zone, and we can start loading up, and we can ride it down. And I like it to the 51. I mean the 50%. All right. This is great. Over 300 something pips to this. I take that. All right. Ultimately, we do believe that it'll come down to the 61% area. All right. So boom. Here, this is another zone. And that's the second target that we believe it'll go to. So I like this. I like this trade. So I'm looking for shorting opportunities up here once it presents it. Let's see what the market works like and do. Let's see what this candle. All right. Ultimately, I need this green candle to be eliminated by a red candle. Until then, I'm not taking this trade. Once this red candle eliminates this green candle, I'm then putting my stop loss above the green candle. Until then, there's nothing. I'm not taking this trade until I get an elimination. So I'll probably set an alert. All right, I can set an alert to add an alert. All right. Let me go back and let me see what price point this would be. All right, 157, 131. Add alert. Crossing 157. I said 31. Let me see. I remember. Okay, 131. 157, 131. Add alert. 157, 131. Give me an alert. Only one at once. Show pop up. Notify me on my app. Send me an email. All right. When EuroCAD cross 157, 131, they're gonna hit me up. All right. This will expire September 9th. So I'm gonna hit create. Boom. All right. Let me take this off. Boom. All right. So you see it on the chart with the dotted lines, the orange dotted lines. As soon as price cross that, I'm looking to enter to go short. Okay. I want to see a nice little bar elimination. I want to eliminate this bar. That gives me a greater opportunity to then, like I said, set my stop loss up here. And likely want to go ahead and complete going down to the downside. I also could put another alert right here. Once price breaks this, of course, we can move down, come back up, retest, and then hit. But regardless, I like this setup. I think it's a good time to short this and take this wave on. All right. If we do this, once again, if we're in this cup and handle, like I said, the handle could come back down in this area. Or guys, we could just consolidate on. Regardless, we're just making a trade off of a move that we see. If we want to, we can take this whole entire move up. Why? Because this is a huge impulsive move to the upside. A bullish move. All right. Boom. Let's see. We got what, 50? Oh man, look at this. So remember, if any of these areas are breached, more than likely it wants to go back down. It wants to go to the next level. All right. So you see up here, we had price had its highest peak, and then it came down and it broke the 23%. But what happened? It came back up above 23. And if it breaks the 23, what does that mean? It has a high probability going to the 38. And look what price it did. All right. Let me just make it look a little better. Now let's see if we can just go ahead and put it on a bigger screen. Okay. Okay, what do we got? All right. That price come up here, reject, come back down 23%, hit some 38, coming back up, came back. It pierced the 38 right here. What does that mean? We got a high probability of going to the 50. Price came back up, retraced, and then it what? Made its way to the 50. What left the clue? That wick, and it pierced. What covered the wick? All right, these candles covered the wick. All right, we pierced what? 50. What does that leave a clue to? That we may be coming down to the what? The 61%. Look at this move. We can come down, guys. We can come down, and if we're smart and we play our cards right, look what we could actually accomplish. A 865 pip move to the downside. Okay, I wouldn't mind just taking a little swing account, maybe put $200 in it, and then set a dollar lot size and short it on down. It's something to think about, guys. Okay, so and that was not financial advice. Just giving you something to think about. Always protect yourself. Okay. If I was to take this as a swing trade, I possibly would do a dollar lot size, and my stop loss would be somewhere up here. And that, from here up here, that's a 206 pip move. This, like I said, this would be something if you're just swinging, just purely just swinging this particular pair. Of course, you probably want to put a little bit more money in, but hey, guys, it's something to think about. All right. So let's see. I'm gonna go ahead and add a third target. We're gonna drag it from here on here. All right, so guys, remember, we're still trading naked charts. We don't keep all this stuff on here. This is what it look like. We have our plotted zones. This is what we're doing. All right, we're trying to keep this as simple as possible. Continuously perfect marking up your charts. Okay, use that fib extension. Use those retracement tools to help you identify areas that you may have missed. Okay, let's do one more. So the Euro CAD. Let's do like a Swiss franc type deal. So let's do a British pound, maybe Swiss franc. And I don't think I've ever traded this pair before. All right, so let's look. Let's see what's going on. All right, so we clearly have a bull flag. I mean a bear flag. All right, we got a bear pole coming down right here. All right, and let me put this little. Oh, all right. Now look at this. We have an uptrend. Remember, I tell you these flags look like they're in uptrends or downtrends. So a bear flag look like it's in an uptrend, and a bull flag like it's in a downtrend. All right. So look how this looks. Okay, it looks like it's going up, right? But it's really like it's like a flag. Okay, so imagine a flag is flying, but this is upside down and it's flapping in the wind. Okay, or not flapping in the wind, but or hanging down. There is no wind. Okay, when you look at a pennant look like it just. Let me show you pennant. All right, that's what a pennant will look like. So when you look on somebody has that college football flags on a car like a pennant, all right. But if you take like a regular flag and you hung it on a pole, if there's no wind, it just flaps down. Okay. Well, that's something similar to what this is, except this is just upside down. Okay. We're at least going to see how price reacts to come back down to this, but we want to see price break below here. So if price breaks below, we want to look for what? You can either take the takeout. If you're aggressive trading, go ahead, you can take the takeout, but also be ready for a massive pullback to this zone. All right. And then once the pullback happens, the conservative trader can look for their entry and take it to the downside. All right. So where's the price target for down here? Once again, I'm showing you the fib extension tool so that you can get used to. If you don't feel comfortable in market structure, just use the extension tool. It's still valuable. You don't have to use market structure if you want, but a lot of times we just want to make sure that it lines up with confluence with other areas on the chart. And bam, there we go. We're looking for a downside target. But price has to do what, guys? It has to break. It has to break this area right here. Price has to break this. Okay? So that's what we want to see. We want to see price break. Maybe retest. Come down to this area. Let's see how many pips it's possible it could be. 445 or more pips. Not bad, guys. Let's look left. All right. Remember those wicks, guys. These wicks need to be covered. So you look at all these wicks at left clues and look how price come back down, trying to eliminate a little by little. Look at this wick. Look at this wick. Boom. Turn, go to upside, come back down. All right. So you may say, well, Eric, what about these wicks up here? Well, look, these over here covered that one, so that's fine. And yes, you do have these up here. But what we're trying to say is that over time, these wicks up here will be covered too, but maybe now is not the time. All right. Also, you had a what? Head and shoulders. Head, left shoulder, right shoulder, price broke. Boom. All right. We can measure from here down, and we can see what's going on. All right. Okay. We pierced to 61%. Okay. Price could come back down to this area. And it still could come back up here if it wanted to. But regardless, everything we need to see what's going on. But this is the dominant trend. We got a pattern showing up. And we want to see if we can take this to the downside. Okay. Now, don't be with this trade. It needs to break this area, guys. We're not taking this trade to break it. All right. If this area is broken, we're definitely going to be heading up to the upside, and that's a possibility. So we don't just jump in these trades just because we got a bias. If it come back up here, we can come up into this area, which would make sense because it breached the 61%, and we got it here. Now, what I am going to do is, let's do this. Put this back here. All right, I'm going to measure from here instead. All right, because that's the extreme high, and it may change our bias to the upside. All right, so now look the difference. It breached the 51%. The 61% still could be a viable target to the upside. All right. But regardless, we're gonna need, like I said, we need to break to come down to this area. Okay, we already had a retest in this area up. We could come back down here, but this thing could go up or even higher too. But once again, it has to break that area. Okay, we can clearly see a good trend line right here. Okay. Now, here's a good thing. You can look for trading opportunities down to the trend line. Why? If this red candle, if we get a little bit another push down, it broke this. I have no problem with somebody saying, "Hey, I took it short and I took it down to the trend line, and that's 97 pips." Hey, good trading. Stop loss will be above here. Look, guys, we're trading on a daily, so your lot size has to make sense. Your stop loss is 102 pips away. So if you're taking a 50-cent lot size, then that's 50 what, $1 that you can lose. I take that. But if you talking about doing a standard, that's $1,000 if that's your stop loss. So remember, always take your trade as if you're going to 100% lose. That's it. Because if you do that, then you can say to yourself, "Hey, if I take this trade and it goes wrong, I'm gonna lose $1,000." If you don't want to lose $1,000, then don't take a $10 stop lot size. If you're only willing to lose $50, then take your 50-cent lot size. Simple as that. Don't make it difficult. Okay. A lot of times I do take some risk and gambles, just trying new things out. I'm moving away from that because it just really don't work. Last week I think I lost $700. Yeah, I did. $700 off a trade because I was trying something new. I broke all my rules. For what? And I know the reason why. Because I had a monster week prior. Made over $5,000 total for that week. And then I came back the following week trying to take bigger risks. And that's what happened. So I'm keeping myself disciplined this week and trading everything according to the trade plan. So that'll wrap it up, guys. I'm sorry that I didn't post anything last week, but I'm going to continue posting as much as possible. I've been helping people getting set up with cryptocurrencies. I'm passionate about that, and I believe that's the best way to set up a legacy for your family. So I've been doing a lot of onboarding process with helping people with that. But as you know, guys, my email and stuff will be in the description. If you want to reach out to me, let me know. I do consulted one-on-ones with people if you need it. I only work with experienced traders. So if you're not an experienced trader, please go visit like babypips.com. There are some other phenomenal videos on YouTube that are great educators. You can learn from them. You can try to learn as much as possible. So these videos I post, but nevertheless, like, just keep pounding, guys. It's 2020. We're in the middle of a pandemic, and just don't lose sight. Don't become emotional slaves to this market. Understand it, knowing that it's a tool that can bring in wealth, and it can help with financial freedom. But you gotta be dedicated to this and take it serious. All right. So you guys enjoy the rest of your day, and happy trading this week. Trade safe, trade smart, trade your plan. If you don't have a plan, get a plan. All right, have a great one.